Dear students, hope you all are fine. Today in this video we will discuss about the concept and elements of financial system. First we will start with the concept of financial system. A financial system is a network of complex and closely interlinked financial institutions, financial markets, financial instruments and financial services which facilitate the transfer of funds. It consists of savers, intermediaries, instruments and the ultimate users of funds. It can be said that the financial system is the mechanism by which savings are transformed into investments. Financial system is the composition of various institutions, markets, intermediaries, instruments, policymakers, money manager, analysts, practices and various laws and regulation to aid the flow of savings from savers to investors and managing the proper functioning of the system. The financial system is composed of the products and services provided by financial institutions which include banks, insurance companies, pension funds, organized exchanges and many other institutions that facilitate economic transactions. Now we will go to the definitions of financial system given by various persons. According to Prachanna Chandra, the financial system consisting of a variety of institutions, markets and the instruments which are related in a systematic manner and provide the principal means by which savings are transformed into instruments. According to Robinson, the primary function of the financial system is to provide a link between savings and investments for the creation of new wealth and to permit portfolio adjustment in the composition of the existing wealth. According to L.M. Volle, the financial system of any country consists of specialized and non-specialized financial institutions, of organized and unorganized financial markets, of financial instruments and services which facilitate the transfer of funds. Procedures and practices adopted in the markets and financial interrelationships are also part of the system. According to Van Horn, financial system allocates savings efficiently in an economy to ultimate users either for investment in real assets or for consumption. Now we will discuss the fundamental objectives of financial system. There are various objectives of financial system, but here we will discuss only the important ones. The first and foremost objective of financial system is to provide a structured payment system in the economy. Secondly, the objective of financial system Secondly, the objective of financial system is to give money the time value that it deserves. Another important objective of financial system is to reduce the financial risk or to compensate risk taking for desirable objectives by offering various products and services. Another fundamental objective of financial system is to enable collection and dispersion of information that allows most efficient economic allocation of resources. Lastly, another objective of financial system is to maintain market stability in the economic sector by providing prices which indicates the performance of the investments, which in turn determine the subsequent allocation of resources. Now we will discuss about the elements of financial system. The financial system has 6 essential elements. The first element of financial system is the lenders and the borrowers. The ultimate lenders, we can say that the ultimate lenders are the surplus economic units and the borrowers are the deficit economic units. These ultimate lenders and borrowers are the non-financial economic units that undertake the lending and borrowing process. The ultimate lenders lend to borrowers either directly or indirectly via the financial intermediaries or by buying the securities they issue. These lenders and borrowers come from the household sectors, business or commercial sectors, government sector or foreign sector. This group is the group which undertakes the borrowing and lending process in the economy. Secondly, the important element of financial system is the financial intermediaries. The financial intermediaries intermediate the lending and borrowing process. They interpose themselves between the lenders and borrowers and earn a margin for the benefits of intermediation, including lower risk for the lender. They buy the securities of the borrowers and issue their own to fund this, and thereby they become financial intermediaries. The third important element of financial system is the financial instruments, or we can say the financial assets. These financial instruments or assets are created by the ultimate borrowers and financial intermediaries to satisfy the financial requirements of the various participants. The financial instruments are debt instruments and stock and share instruments. The instruments of the household sector include a mortgage loan or an overdraft loan from a bank, while instruments in the commercial sector include treasury bills, corporate bonds, T-bonds, etc. These instruments may be marketable like the treasury bills or non-marketable like the retirement annuities. The next element of financial system is financial markets. The financial markets are the institutional arrangements and conventions that exist for the issue and trading or dealing of the financial instruments. Financial markets include the debt market, the money market, and the bond market. Another important element of financial system is money creation. The creation of money, or we can say the bank deposits, these are done by the banks when they satisfy the demand for new bank credit. This is a unique feature of banks. The central banks have the tools to curb money growth in the economy. Money creation is a huge part in the financial system, and the creation of money helps in determining the interest rates, inflation rate, the value of income or property assets, and the value of any financial instrument. The last and another important element of financial system is price creation or price discovery. That is, we can say that price creation implies the establishment in the financial markets of the price of money, that is, the rates of interest on debt and deposit instruments and the prices of share instruments. Price creation is determined by the overall supply and demand of credit. So, these are the most important elements of financial system. If you have any query, any doubt or any question on the concept or elements of financial system, you can contact me in my number. I have provided this number in this slide. Thank you very much for watching this video.